You open your phone. Stock market apps. Green numbers. Red numbers. Everyone online looks like they know what they're doing. Crypto experts. Stock gurus. Finance influencers. Everyone talking about quick money. You feel like you're late. Like everyone already knows the secret. So you start searching. How to invest. How to get rich. How to beat the market. That's when you discover a man. Old, calm, not flashy. His name is Warren Buffett. He's worth billions, but his advice is strangely simple. Not trading tricks, not secret formulas, just rules. 3 of them. Simple enough to understand, hard enough to follow. Rule 1. Never lose money. At first, the rule sounds impossible. Of course investors lose money. Markets crash, stocks fall, even professionals make mistakes. But that's not what Warren Buffett means. He means something deeper. Don't take risks that destroy you. A bad trade can hurt, but a reckless decision can end the game. Many investors lose everything not because they were unlucky, but because they were careless. They borrowed too much. They chased hype. They invested in things they never understood. And when the market turned, their money disappeared. Buffett's rule is simple. Protect your capital first. Because in investing, survival is power. If you stay in the game long enough, compounding does the rest. First protect the money, then grow it. Rule 2. Invest only in what you understand. The internet loves complicated things. Artificial intelligence stocks, quantum computing, new technology companies with confusing business models. People buy them because they sound smart. But Warren Buffett calls this dangerous. He has a concept, the circle of competence. It means something simple. Only invest in businesses you actually understand. If you don't understand how a company makes money, you are not investing. You are gambling. And gambling always looks smart, right before it collapses. Buffett ignored technology stocks for years, not because they were bad, but because he didn't understand them. Most investors try to look smart. Buffett tries to stay disciplined. That's why he wins. Rule 3. Be fearful when others are greedy. Markets are emotional. When prices rise, people become greedy. Everyone starts buying. Friends talk about stocks. News channels celebrate the boom. It feels safe. But that's often when prices are already too high. Then something changes. Markets fall. Suddenly, everyone panics. People sell everything. They run away from the market. That's when opportunities appear. While others panic, smart investors quietly buy. This is the moment Warren Buffett waits for, because real wealth is built in moments of fear, not excitement. Most people believe investing is complicated. Charts, indicators, predictions. But the truth is simpler. 3 rules. Protect your money, understand what you buy, and control your emotions. That's it. No secret formula, just discipline and patience, which might explain something interesting. The greatest investor in history built his fortune not by doing more than others, but by doing less mistakes than everyone else.